with the wheelhouse. Hope everybody's doing good. I want to go through a few things that are going on in the markets. Usually I'm pretty optimistic. I'm usually not that guy, wanting to, spread bearish news. However, when the news affects my charts, we got to talk about it. So there are quite a few things going on. It's got my radar, my alerts going. I do just want to bring it up so you're aware of it. First of all, JPMorgan has set their quants, their algos, to sell off $50 billion in equities, stocks, supposedly non-US stocks. I don't know if I believe that. I don't even think it matters, because if 50 billion even of non-US stocks get sold off, it's going to be 100 billion within a minute or two from there because of all the stops and more algos triggering. Remember that movie Wolf of Wall Street where Leonardo DiCaprio is with Matthew McConaughey at lunch, and they go back to the office and everything crashes? That was, I think, Black Monday, and that was a crazy algo trip that just went haywire and created massive selling panic and crushed the market. So if they set their quants to 50 billion to sell off, if the S&P drops below the 200, this is the purple line, the 200, and this is the Dow, not the S&P. So let's look at the S&P. Now, I have an EMA on my chart. For looking at this, you're already under the 200 on the EMA, but typically, TradFi is not going to just be looking at an EMA. They're going to look at a DMA, an SMA, probably an SMA, and SMAs are always lower than EMAs. They're, simple moving average instead of exponential. So we're basically right on the line, and if we drop below, their algos are already set to sell off. That could create massive selling pressure globally, a global sell-off. Now, if we do drop below the 200, no more accumulation phase, back to bear phase. Remember, below the 200, bearish. Above the 200, bullish, okay? We'll keep it simple. However, later in this video, I'm going to show you some things that I'm seeing as far as potential manipulation, some little tricks that I see, and some things that I see from looking at all the charts, through a lot of sectors, and I'll show you what I'm talking about as I go. Also, not only did JPMorgan set their quant to sell off 50 billion in equities if we go below the 200 on the S&P, but also today, which is Tuesday when I'm filming this, $3 billion were opened in short interest on the S&P. Okay, that's not good. Now, you may think, oh, well, nobody wants it to fall. Well, that might be what you want, but you make money going either way, like I've been showing you on this channel. So a couple days ago, I think it was yesterday, which was Monday, I made an alert and an announcement in my group, and I said, hey, with this news, you want to go through your portfolio and you want to put stops on all your longs, in the accurate places that you're comfortable with, whether it's above break even or the previous pivot high on the daily or the hourly or the 4 hour, whatever you're, whatever you want to do based off your conviction. Take a look at the technicals, come in the Discord and ask me. I'll be glad to help you if you like. And, you should do that on your longs first. Now, if it does drop and we get a savage sell-off and everything's going haywire, then the media, you'll know it because you'll see it in the charts, you'll feel it in your portfolio, and the media will be going crazy. Immediately, go over to your leverage bears, your triple leverage bears, and just buy the heck out of them. Let me show you something. Okay, what we're looking at is DRV. This is a triple leverage bear betting real estate will come down, okay? Now, if you just back it up, anytime that the price action's coming down, that means that real estate is going up like it was through the pandemic. But here's the pandemic. And in one day, it went from $208 to $670. It's like a 300% gain overnight. Now we can look at other ones. Let's just go look at a triple leverage financial. Let's go look at FAS. Okay, let's go take a look. What's this? This is also COVID. So it went in one day from 47.67 to 421. We're talking about pretty much a 10x. 10x. We can look at all of them. I mean, we don't have to look at all of them, but we can look at a few of them. Let's just look at the NASDAQ, okay? Let's go. Yeah, there it is. Okay. So this didn't do it overnight, but it went from $402 on the NASDAQ all the way to, it doubled, went to 800 basically. So you could see that the triple leverage bears can be a jackpot hand. So instead of being scared, just put your stops on your longs where you're comfortable, and if it does go down, buy the triple leverage bears immediately. Okay, now on top of the 50 billion being set to sell, there's also the 3 billion in short interest that was open today, and there's also 2.5 billion that was bought between yesterday and today on short duration, high yield bonds. So just over 4% yield, it's pretty good. It lets you sleep at night. I mean, you're getting 4%, without having to worry about anything. Kind of keeps you flat against inflation. However, think about it like this. You put 100 grand in those bonds and you're getting 4 grand a year. So, I think a lot of people, if you're really conservative, you have that. If you're good at trading, you don't. It might not be juicy enough for somebody like me, but it's not a bad thing to consider for stability in your portfolio. I wouldn't put my whole portfolio in bonds right now, but something to consider. And 2.5 billion in inflows just went in there. And when I say short duration, it's a 7-year, by the way. Okay. Next. We got some issues going on with Xi Jinping and his loyalist cabinet. Okay, that's going on, and his people are being, placed in there, and more ties with Russia, more tensions with the US are escalating. It's not going to happen overnight, and what's going on behind the scenes, you and I don't know. It will not be on the media. Presidents meet with generals and councils, and they call their allies and countries and say, hey, can we move an aircraft carrier and some battleships over there? Hey, can we use your base? Hey, can we send over a couple thousand soldiers? Hey, can we fly in some tanks, jeeps, and machine guns? This goes on before you know about it, okay? And there's teams like Delta, Rangers that go out before, there's even deployments, for intel. So I'm not saying that there's going to be a war, but you got Apple suppliers all trying to go to Vietnam and India, and trying to leave China. And a lot of that's because they lost a lot of business during the COVID lockdown. So, the US has a trade war going on with China, which has escalated to a Cold War. And now I can never say his name, Xi Jinping, he's getting his super loyalists together and butting up closer with Putin and Russia. So we will have to see where that goes. But I've always said, if there's a war with China, I'm out of the market. I'm not trying to play that game. I'll get out. I might go super, super savage and heavy and find like the right pick, like something that's going to like quadruple in like one day. A lot of people, look at George Soros, Bill Ackman. I mean, some of these guys, they made their money on the drops. Okay, those are the jackpot hands. Remember, you take the stairs up, you take the elevator down, or better yet, you take the stairs up and you jump out the window and fall down. It goes fast, and when you drop 4 times faster, plus put a triple X leverage on that sucker, that's 12X on the velocity, okay, coming down. Now, it was JPMorgan that did the 50 billion in quants, okay? And believe me, Goldman and everybody else is they're going to be selling, and there's going to be triggers, and it's going to be global. There will be a sell-off if we fall below the S&P on the daily, okay, for the 200. And that would probably be an SMA, I'll just remind you. However, I had spotted yesterday in the daily candle a specific thing in the price action that allowed me to know in February 2021 to call my brother and to get out of the market the day before the 4-month crash from February 2021 to mid-May or something. Okay. Also, before this last bear market started, the same distribution type of candles I noticed. It was part of the reason I knew to get everybody out and made all those videos and alerts and whatnot. Well, yesterday I noticed the same type of candle, and I noticed it before I found out about the JPMorgan thing. And we were right on the line. So today it was very flat. And when you see the indexes up $1 or down $2, that's eerie. That is usually a really, really, really bad sign. And it usually means there's going to be a big, big drop after. Usually. Those last 2 times it was. We'll see what happens. I don't want it to drop. But if you have a plan, you're a lot better. You're prepared. And if you know to set your longs right now, after this video, and then you basically just go and get your watch list of leveraged bears if you don't have it. And if that happens and it starts dropping really fast and you see it on the news and all hell is breaking loose, you buy those leveraged bears with as much money as you can. You load up the truck, you buy with both hands, you put your foot on the pedal, and you let it drop, and you make a lot of money really, really fast. And then you get out and you take your gains. You don't sit in there for a month or anything like that. Just take your gains. Okay, so not only did I see the distribution type of candle, which is a big momentum in the morning, which created a hike and a she momentum candle off of the 200 bounce, okay, on all the indexes. But then later in the day, it was what I call a psychological fade. Psychological fade is when you have a lot of buying pressure in the morning, and then you have a big wick down. So it's a distribution candle. So they push it up so they can get out, and then they're selling off behind the scenes and you get trapped. And they also did that today. So it's 2 days in a row of these distribution type candles in psychological fade, with a media blitz going on internationally at the exact time that all the ISM, PMI, and all the information's coming out in all the different countries. By the way, tonight crypto's rallying hard because China released their PMI, and they had talk about a surprise. Highest PMI report in 11 years, since 2012. It was remarkably high, and immediately I made an alert and I said Chinese stocks are going to run hard today, and immediately crypto started running. So that's good. So if you like JD and ByteDance and Baba, Neo is reporting today. You can do that. I don't, there's plenty of stocks out there for me. I'm not going to mess with Chinese stocks. And let me tell you something else. If for some reason it escalates with China, you got to know that the Chinese companies will get kicked out of the US stock exchanges. And you're like, nah, Chris, they didn't do it last time. Let me tell you, you are smoking, fool. They will. If we are in a war with China, you better believe Chinese companies will not be listed on the New York Stock Exchange, the NASDAQ, none of them, okay? They will be gone. That kind of risk I'm not willing to take. Just like I say, if you're going to buy under the 200, or even at the beginning of the accumulation phase, you should start buying Dow stocks that will not go bankrupt, like Disney and Microsoft and Apple. We've talked about it 100 times, okay? Now, when JPMorgan puts out the FUD, I immediately want to go look at JPMorgan, okay? So I want to go see what's going on. So they're the ones that put out the news, and I started looking at it, right? And I'm like, JPMorgan, they obviously know technicals, they obviously know what's going on, and right here, they just happen to have a breakout. And it just so happens to kind of look smart to people when they say they're going to sell $50 billion in equities if we drop below the S&P. And notice how the momentum came in towards the breakout, because people are like, oh, they're offloading risk. I'm going to short the S&P. I'm going to buy JPMorgan because they're not going to be losing money on their next earnings. It's another form of manipulation. And just so happens that the 5 and 9 crossed today on the daily. Suspicious, in my opinion. Now, a little more on the China thing. So tonight, there are bills being passed on sanctions for China, and also some new bills for Taiwan. Good bills for Taiwan, bad sanctions for China. Guys, this has been going on since I was a kid. My dad was talking about feeding a sleeping giant with China since the 1980s. He used to do a lot of business over there. He lived in Germany for a while, and he's aerospace engineer, and he knows a lot about it. And he was talking about it back in the 80s. And so I'm not saying anything's going to happen tomorrow. However, that is a major reason that you would abort, because you're not talking like Vietnam where you're like strapping up with some grenades and a demolition team and a sniper on Overwatch and some assault rifles on a 6-man team storming the door. No, man, they're dropping a Wuhan plague on your ass, and you just all die. It's like the Last of Us. It's like a video game. It's it could get nasty in a whole different way than you might be thinking. So, why are Apple suppliers leaving China? Well, like I said, during COVID, with the long mask situation and the long lockdown in Beijing, they lost a lot of business. They started looking in India. They started looking in Vietnam, where they can do this. But it's going to take over 100,000 people for Apple alone of sophisticated high-end jobs that they would have to put in those countries or move there, number one. Number two, I heard on Bloomberg that Apple, it would take them 8 years to move only 10% of their business out of China. So, if there is a big problem between the US and China, this is what you got to know. Companies like Apple, companies like Nike, things that are manufactured in China, any resources, they're going to get hit hard. And if Apple gets hit hard, so do the indexes. And what happens when the indexes fall? Red tide sink boats. Apple is hugely weighted in the indexes, and if the indexes fall, it's going to trigger those algos. So it could be a global market sell-off, but it could also be a jackpot opportunity with those triple leverage bears. Be smart, use capital protection, know where you're at, and don't forget about this little breakout with this momentum that JPMorgan kind of created, because their stock's looking pretty good. It's above the 200. They're getting momentum, breaking out, spreading some FUD. But I want to show you something. I just want to walk you through something real quick. Let's just go down the watch list real quick. We're going to stay on the daily for crypto and stocks. And this is the 200, okay, the purple one. And when these two cross the 5 and the 9, that's really good. Like, this is Coinbase. You would have bought at $34.94, and you would have sold over here at, I can't read it, what it is. It's like $66. So it's like a double. And it's about to cross again. So that looks pretty bullish on the chart, even though you're below the 200. It's like a Mullen Automotive. Not quite there, but getting momentum going up. Notice that? Let's look at AMP. I'm on the 5 minute for AMP for some reason. Look at AMP on the daily. AMP has had crazy momentum. That looks good. Crypto. Let's look at Zeus, Olympia Steel. I mean, guys. Okay, that looks like a leader. Let's look at Ren. I mentioned Ren the other day. That's the daily, coming up on the 200. When you look at the charts individually, they look like everything is okay. Okay, that's Virgin Galactic. They just announced by, I can't remember what quarter. It's either fourth quarter of 2023 or second quarter of 2024. I don't remember. I only heard it once. They're going to be flying a space research team and from Italy into space. I mean, they just announced that on their earnings. Look at Lucid. I mean, it's going up. It doesn't have crazy strength. It's still in a bear, but I mean, it's going up. Look at Edwards Life Sciences. There it goes up and it's crossing. Let's look at Riot. Again, it's going up. So what I'm saying is, look at Maker. I mean, Maker's cracking. Look at Steel Dynamics coming up on a breakout. So when you look at the individual charts, they look good, yet there's massive fear around. So here we are on the SPY, and we are below the 200. And let's just go look at the indexes really quick. Let's look at the Russell. Okay, the Russell made lower highs off of the premium zone. So it came down and it made a lower high. It bounced off the 200 and it's trying to get above this major breakout. But see these candles? This is what I'm trying to tell you. These are the distribution candles where it goes way up. See where the wick went all the way to here? Take a look. So the whole candle went up here and then it was a psychological fade down. That's a distribution candle. This is the same. It went way up and then faded down. Okay? Those are sketchy. Those are sketchy if you can catch them. Same thing here. You got a doji and then it's kind of, it's going sideways, if you will. SPY we just looked at, and the Dow. So the Dow under the 200, body is in the primary downtrend. Let's look one more time real fast. The Russell looks the best. The dollar's going up above the 200 on the daily. That's not good. The NASDAQ is below the 200. That's not good. The SPY is below the 200. That's not good. And the Dow is below the 200. That's not good. And the VIX is actually heading up, but did have a little weakness today. But look at the sentiment coming in. Now let's look at Bitcoin. It is also, on top of everything, it's a new month, so new positioning. Now, I'm worried about this being a shoulder, head, shoulder kind of thing, but Bitcoin has been quite resilient, and the Bitcoin dominance has showed that lately against the alts. It's definitely taking all the oxygen in the room. You do have your Jedi green lights. You haven't even fallen to the equilibrium. You did go right to the 200. The map book bought right where I told you it would oscillate. And, you just don't want to break these previous pivot lows. You just don't want to do that. So definitely kind of a little mixed bag going on here. I mean, we were up at 25. I told you there'd be a lot of take profits right there. I mean, that's kind of how it works. And, I had told you before that it was going to bounce here. I told you where the take profits would be. And now we're just kind of waiting to see. But because it's a new month, we can look at the monthly candle. Now, look at that. We are still, let me see if I can fix that. Okay. We are still going up, and this being blue on the monthly is very, very, very good. We are above this line as well, which is still good. That's just under 21,000, 20,935. So that's good. Overall, the monthly looks good. It's still a small candle, but it's not horrible. So yeah, I mean, look, guys, you just got to be cautious. Put the stops on your longs, and be ready to buy those leverage bears. Now, DRV is a bet that real estate will go down. Now, a report came out, and real estate subprime mortgages are at all-time high defaults like they were back in 2008. In fact, I think it was 8 out of 9 months in a row that they've been defaulting. So you got that going on. You have escalation with China and the US. You have Apple that is looking bearish, that has a lot of weighting in the indexes falling, and their suppliers leaving China. You have new sanctions being ordered by the executive branch in the United States, and you have JPMorgan setting $50 billion in quant algos that we fall under the S&P 200, which will trigger a lot more globally. And you have people betting a lot of money, $3 billion on the S&P, shorting the S&P, as well as the bond yields, the short duration. People are loading into those. So when people load into those bonds, that's a safety play. They'll buy stuff like that and gold. It's just what you do, like JNUG is turning right now on the daily, and I'm probably going to be grabbing more of that myself. So DRV is a good one because real estate is defaulting. And but remember, JPMorgan holds a lot of that real estate paper, right? So it's a little hard to trust those guys sometimes. FAS is a bet that financials will go down. So have your triple leverage bears ready, because you can make a lot of crazy money. Crazy money. Like this is just biotech, okay? And this is COVID. So here we go. We were at 211, and I'll just tell you how long. So we were at 211, and we went all the way to 572. Dude, that's like 250%. And we did that in 1 month. Like 3 days less than 1 month. And that was biotech, and COVID. That one got the least of it because people were thinking biotech was probably going to be good. But anytime there's a black swan event, you have to understand that, smart money is going to immediately short, hedge, or buy these triple leverage bears. And that's why I made money in the bear market and was trying to explain that to you guys for like a year and a half. And this would be your chance to actually do what I did if it drops. Step one, put your stops on your longs where you're comfortable, but you should put stops on there. Step two, have a watch list of leverage bears. Step three, if I would put alerts on my chart too. So you're not only getting stopped, you're getting alerted, okay? Sirens and alarms are going off on your phone and stuff. And then make sure you just turn on the news and see what's going on, and then just start loading up the truck with these triple leverages and just get into those. And then you put buy stops above if you want, and you can walk those down, or you can just let it fall, depending on your indicators, and then get out and take your money. So look, I'm going to leave it there. Just heeding a little caution is all, okay? It's really hard to say because you have a lot of charts showing bullish momentum. You are in the accumulation phase and exploring leadership in sectors, okay? That's all bullish. But you have a lot of sketchy kind of stuff going on in the media and in the geopolitical. And then you have a lot of reporting going on, and then you have a lot of this like extra FUD that gets leaked about the 50 billion in quant algos. So just heed some caution. You're gonna have to monitor your trades, and I just wanted to kind of put you up on notice just to be careful. And so we'll leave it there. Come in the Discord. It's free to join if you want our indicator, our courses, mentoring, Wheelhouse Wednesdays, all that stuff. You can subscribe. I have a 50% off coupon. Just come in for free to the Discord. The link is in the description. We have a Twitter, Instagram, and the YouTube, obviously. And what else? MEXC Global. If you want to check out MEXC Global, the link is in the description below. You can leverage trade on there. All your futures for crypto. It's really good. They have every crypto you can ever want on there. It's pretty great. And then if you want up to $1 million to trade, to prop trade, you can. I trade in 2 firms, but I am an affiliate with one, and I will put the link in the description for you as well. You can get 10% off, and you can get up to $1 million with 10x leverage right now, but you can also pay a little bit more if you want 20x leverage, which is 20 million. So you can definitely make a lot of money if you know what you're doing with those affiliate links and those prop trades. You can also come in the Discord and you can get my alerts, and you could talk to me, throughout the day and trade with me essentially. So look, we'll leave it there. My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse.